over a lot longer time. So that means you're paying more interest. Look how much more interest, Kira, you're paying over 50 years and 30 years. $816,000 in interest versus $400,000.
I have never used my car insurance in 20 years. This $30,000, this isn't all that I pay. Registration costs, car payment if there is one. I never had a car payment until 30 when the guy hit me and I had to buy a new car because insurance wouldn't pay. 20 years, zero return, $30,000 out of my pocket for nothing.
Hello guys, welcome back to the Purely MJ Show. If it's your first time, my name is MJ. In this channel, we discuss financial literacy, avoiding debt, and how to make better financial decisions through the lenses of other people's experiences. Make sure to like, comment, and subscribe. Join the family. Don't just watch. Join the journey. And stick and stay till the end, because it's going to get wild.
We were talking about the interest rate. And then we started talking about, okay, what if we still owe money on our mortgage? We've already died. Does that go down to our kids?
Who has to pay the rest of it?
Yeah, exactly. Do we leave everything to the cat, to the dog? I mean, no, you should have heard the conversation going on with us in the control room.
It's a talker.
All right. So let's start with the 50-year mortgages. What does that mean for homeowners?
Okay, so typically when you're taking out a mortgage, the traditional benchmark time that you have to pay off that mortgage is 30 years. So I've been kind of crunching the numbers to figure out if you do a 50-year mortgage, is that going to save you money? And here's what this looks like if you look at a monthly basis. Okay. Your typical monthly payment on a $400,000 home loan, that's about the median priced home in the U.S. for a 50-year mortgage, $2,800. At a 30-year mortgage, this is at today's interest rates. Okay. It's about $3,000, almost $3,100. So you are saving close to $250 with this option every month. Okay. But as you said, you're paying this off over a lot longer time. So that means you're paying more interest. Look how much more interest, Kira, you're paying over 50 years and 30 years. $816,000 in interest versus $400,000. I mean, still a lot of interest, basically. So the argument against this is that you're ending up paying way more money to your bank. Your lenders are going to say the
banks are going to be happy. The lenders are going to be thrilled.
Exactly. That's sort of, while it might mean a little bit short-term gain, over the long term, you are making more money for your bank than you might be for yourself.
So who at the White House is talking with various banks?
We did have dinner with a couple of those CEOs.
So let's talk a little bit about it, right? So the 50-year mortgage is considered a scam, in my opinion, because you just seen it. It's a scam, right? When mortgages were first introduced, it was, and correct me down below in the comment section, right? It was 15-year mortgages, right? The idea of a 30-year mortgage was considered stupid. It was considered dumb. You know what I'm saying? It was considered a fool's trap. You know what I'm saying? Now they think you're dumb. Again, they're still thinking you're stupid and dumb and a foolish person because they want to slap you with a 50-year loan. As you can see, there's no difference between the 50 to 30 years, only $250 difference. It's basically a massive long-term cost for a very short-term savings, right? And think about it, right? The total interest paid is massively higher compared to the 30 years. The equity building is massively slow. You know what I mean? Because it's taking you longer to basically own equity in this. So selling it would be a disaster. And then the monthly payments are extremely lower, but not that much. It's $250. So for me, bottom line is you spend 20 extra years. Listen to me. You spend 20 extra years paying debt and building equity at a snail's pace, like a snail, like walking, like tippy toe, right? And ultimately, you're paying hundreds of thousands of dollars more for the same house, literally, right? So it makes unaffordable look cheap, and this benefits the lenders, not the borrowers, right? And this reminds me of the World Economic Forum and their 2030 goal of them saying that you're going to own nothing and be happy. At the end of the day, this to me is the creation of permanent renters. I would rather rent an apartment or rent a townhouse for the rest of my life than to pay $816,000 in just interest alone. You must be goofy.
Right? Interessante. All right, let's talk then about the 15-year car loans and what that would look like.
Yeah, so similar idea, right? So the same idea there is you're paying out over a longer amount of time, and it's going to lower your payments for a car. Car loans are a little bit tricky because we have seen that car prices have been so high, and that's meant that people are buying used cars, so then used car prices go up. Similar math there, though. Ultimately, if you're in debt for longer, you're going to pay more interest. Might make it shorter, might make it cheaper in the short term, maybe not in the long term.
All right. Now, the White House says Trump is still committed apparently to sending Americans $2,000 dividend checks, right?
Yeah.
Okay, so who's going to be getting those?
And remember how popular those stimulus checks were in the first term, those $2,000 checks. So this is an idea that's worked before. Idea is that this would help people again, and who wouldn't want to get a $2,000 check?
Right.
Did the math on this one for you too. This is going to cost about $600 billion. The president says that the way that you would pay for this is with tariffs. Well, we know that tariffs in the best case, or the current kind of run rate, how you would expect tariffs to make money for the government, it's looking at $300 billion. So this is twice as expensive as the money to pay for them. The question becomes, where does that money come from? And is it ultimately going to come from taxpayers who are then paying more money to
100%.
get that money back at some point?
Average car right now is $50,000. Let's say you do a 7-year loan, you've paid $14,000 in interest. So now let's say a 15-year car loan, you have paid almost $40,000 in interest for that same $50,000 car. So if you add it, interest plus the car amount, that's $90,000. Again, this is to cripple Americans and to keep you in generational debt, right? You're going to be 90 paying off a house, and you're going to be 70 or 60 paying off the car.
There's no point in leaving your children financial assets, liquid assets, fixed assets, if you don't properly teach them.
Right.
Point in case, I had a young lady. You ever heard those stories, Brandon, when people found out, like, hey, I had a distant relative I never met and had all this money.
Mm-hmm.
Lawyer reached out, said, hey, on your dad's side, you had a great aunt. She passed, and there's like $25 million that just been sitting there that you're now heir to. They're like, we'll do all the paperwork. We just want 5% of it. Cool. She come in. She said, hey, I want to buy a house. She said, by the time I'm finished, I have $20 million. She comes in, show me the paperwork. The house is $10 million. I said, we're not allowing you to buy a $10 million house.
Right.
No, it was regular 14. I'm getting a deal. Like, no. Do you even know what it's going to cost you?
Maintain it. And
maintain it. And I'm like, and I had my wealth advisor, and he was like, look, I'm not telling you not to spend money. Take $1 million, blow it. You know, he was like, I can show you how we can take this money and it will generate, I think at the time, he was like, it was going to generate for her like $12,000 a month.
Mm-hmm.
And he was like, now your money won't grow, but you'll be able to live off the interest.
Yeah.
And this is how much. And he was like, and I'm going to tell you how I know you can live off that interest, because you're doing it now. And he was like, what can you do in a $1 million house that you can't, you can't do in this $14 million? And we finally told her, hey, we're not the company for you, because we're not in good faith. We can't let you do that. And in that moment, I also realized, okay, so it's not just good enough to leave the money. You have to leave the education.
This is crazy. And that's one of the biggest things, right? Let's put $20 million to the side for a little bit. Even the regular people that work 9 to 5, as soon as they get a raise, as soon as they get some sort of a promotion or a huge commission check or a bonus, the first thing to do is to just increase their lifestyle, right? Lifestyle inflation or lifestyle creep. They buy a new car. They go and try to finance a house. They, you know what I'm saying? They start to buy certain things that they didn't do in the past. You know what I mean? The biggest thing and the fastest way to generate wealth is to not increase your expenses. You know what I mean? And that is so true. What can you do in a $10 million house that you can't do in a $1 million house? You know what I mean? Just imagine maintaining it. Imagine the property taxes. You know what I mean? I had a kid that I knew back in college. His father owned a construction company, but he sent his son to go to school so he could learn economics, right? It was a good dad. He was trying to teach his son business. He's like, go to school. You know what I mean? Because I didn't go to school, and I'm going to pass this business off to you. So go to school so you can learn a little bit of, business savviness. So the kid was like, yo, my dad, the first thing he did when he made good money was he bought a 2.2 or 2.5, he said $2.5 million house. He said the property taxes the first year was like $30,000. He was telling me this. And I was like, damn. Right? So that's the thing. Property taxes, and a lot of people are learning too with new construction homes, that because if they build a road over there or they get a Starbucks over here or they make a movie theater, you're paying for that. So imagine a $10 million house. Imagine the property tax. That's like damn near 60, 70,000 in just property taxes. Because the bigger the house, the more expensive the house is, the bigger the property taxes. Because it's in a little bit of a bigger land. You know what I mean? It's somewhat of a luxury tax. That's what you're getting taxed for. So it's just, and this is the reason why a lot of people go broke when they win the lottery. They buy the houses, they buy the cars, they buy the lavish things. They buy like 7, 8 different cars, hyper luxury cars. They buy like 3 different houses. They take everybody out. Put 20 million to the side because that was crazy. Just you watching this video. If you make good money or are making money right now, try to cut your expenses.
I woke up pissed off today about insurance, and let me tell you why. Because at this point, it's not even about the rent that is keeping us broke. It's about the insurance, and let me show you. So let's look at car insurance. I've had a car since I was 16 years old. From the ages of 16 to 26, I paid $80 a month for car insurance, which was a lot back then. That's 120 times 80, which is $9,600. Okay. From ages 26 to 30, I paid $120 a month for car insurance because some idiot in a Lyft car hit me while I was parked, and insurance said, oh, no, it was your job to look for other drivers while I'm parked on the side of the street. That brought my insurance up to $120 a month. Over the course of 48 months, at $120, I paid $5,760. Now, my car insurance from the age of 30 to 35 is $250 a month. 30 to 35, $250. 60 months times $250 is $15,000. $15,000. None of these are new cars. I've never had a new car. This was a little bit newer, which was about an 8-year-old car, and this was a 2014. Never had a new car. Over the course of 20 years, I have paid a grand total of $30,360. $30,000. And you might say, oh, but you probably had a couple accidents. You said you had an accident. You must have used that insurance to get it fixed. Wrong. So in 20 years, I've paid $30,000 with zero return. Okay? I have never used my car insurance in 20 years. This $30,000, this isn't all that I pay. Registration costs, car payment if there is one. I never had a car payment until 30 when the guy hit me and I had to buy a new car because insurance wouldn't pay. 20 years, zero return, $30,000 out of my pocket for nothing. My friends, it is not just about the rent cost. Yeah, the rent is too high.
Yes.
But look.
I agree with this lady. She did a beautiful breakdown. A beautiful breakdown. This is tactical breakdown. Like, you know what I mean? And think about it, right? So you could see, right, in the board right now. Look at the board, right? It said from 30 to 35, she was paying $250. So that's 60 months. So she was paying $50,000 for those 5 years that she had the insurance at $250. So let's break this down, right? Why this is economical enslavement that people are choosing to get into. Nobody told you to buy a $1,000 car. You could buy any car. They all do the same thing, point A to point B, get off, get in. That's it. You know what I mean? So let's break this down, right? Some people are paying $1,000 a month for that same term of 5 years. So what is 12? So what is 1,000 times 12? That's 12,000. Now you do 12,000 times 5. What's that? So that's $60,000. Now let's say with that same term of $250 insurance, you're paying $75,000 for that car with insurance, with that same math that she has at $250. 60,000 plus 15,000 is 75,000. And you're not even counting interest. You're not counting registration and tabs. You're not counting gas. You guys are overpaying for these cars. And there's a reason why the government can sit there and say, these people are dumb. Let's keep taxing them at the highest rate. Let's keep costs really high. Let's keep inflation really high. Let's not bring the prices down. And then when they get a little bit, when they fight back and they don't want this, you know what? We will do 0% interest, zero down payment, and no payment for 90 days or 3 months. Not tackling the price. These people don't want to bring the house prices down. They want to give you 50-year mortgage loans to benefit the lenders, but to entrap, enslave, and to keep this person broken down and burnt out and work for us until he can't retire. It's a sad reality, and people are choosing to subscribe to it. People are choosing to entertain it. People are choosing to be part of it. I was in credit card debt for 3 years. 2 years ago. I hated every minute of it. I hated every month. That's why I hated it. And then I got a car payment. Luckily, I got out of it. I tackled it so fast. I was working 2-3 jobs just to pay it. And then I learned that when I finished that car payment, that in that moment, I learned that I was literally putting 20, 30 hours just for a car, just for me to say I own a car when I didn't even own it. It's the saddest reality. But I don't want to keep this video for too long. I'm going to end it here. What do you guys think? Will you ever do a 50-year mortgage? Will you blow $20 million away? And how much are you paying for insurance? Comment down below. I really want to know. I'm going to end the video here. Be good, do good, and I'm going to catch you guys on the next one. Peace.